The second half of the Futures show. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Futures is suggesting we're going to see a higher open with the NASDAQ into new all-time highs in the overnight session. We've got the dollar weakening. I just noticed the euro currency into new highs and nearing the mid-113 handle. We've got Scott Bauer. We've got the CEO of Prosper Trading Academy joining us here this morning on a Monday morning. Scott, welcome. Thanks. We were just talking economic data to come today with Stephanie Lewicki. We've got no numbers today at 7:30. 8:30 a.m. Eastern for us to break down here. But I guess I'm curious, first and foremost, how closely are you going to be watching today's numbers to provide that insight, that piece of the puzzle in terms of the service sector here in the U.S. and how it's faring?
Yeah, we have to. We have to look at this very closely because we know what we saw last week with the jobs number, though I'm not a firm believer in that number yet. But I'd like to see that number, as you were discussing, above 50 today on the services sector. And then later in the week, like you said, it is a kind of light week, but we do get JOLTS tomorrow, PPI, and then, another weekly jobless claims number on Thursday.
You seem a little bit skeptical in terms of what the jobs number was actually telling us on Thursday. Many are saying, Scott, that with some of the furloughs coming back around, some of the shut-in restrictions and employees being basically sent home again as bars, as restaurants have been forced to close again, that those numbers may not be the best representation. Is that what you're hinting at?
It is, Ben, because those numbers did not incorporate the last 2 weeks of June, which, like you said, there were a lot of shut-ins, a lot of closing back down again. And then the troublesome number to me, and I don't mean to be pessimistic at all. I mean, listen, any jobs we can get back are great, but the troublesome numbers to me was the weekly claims was higher than expected, and the continuing claims still at 19 million is on the rise.
Yeah, I mean, we're talking about, again, major job growth, but when you compare it to the job loss that we've seen, it's still minuscule in many ways. It's certainly not what we need it to be in order to get things back on track. Scott, you mentioned, again, we've been talking kind of a lull in terms of economic data this week, but speaking of a lull, we've seen crude oil kind of lose some of the momentum to the upside. Some of the optimism that we saw associated with the bid activity in the indices helped fuel prices higher. The WTI to through the $41 level before, again, kind of losing some of that momentum. What do you have your eye on in terms of the demand side and then ultimately the supply side as well? Because both have been coming under pressure recently, to say the least.
Right, and I think it really is now, at least over the next, call it month or so or rest of the summer maybe, on the demand side. Okay. If the reopening starts happening again, you know what, we could see demand really take off here. But again, I'm very pessimistic about that.
Yeah, and that kind of feeds into what you were saying earlier about how important it is to see, again, this trend in terms of some of the economic data continue to be better, and also feeds into, the importance of these numbers, these services numbers, again, as this is a big part of the economy, and ultimately we know if people are out there, in the service sector working and that's thriving, then ultimately we're going to see demand for some of these crude products. Let's talk a little bit about copper, Scott, because with the NASDAQ rallying into new highs, we're still seeing copper continue higher. Even though crude has slowed, copper's momentum continues to build, and that ultimately is a good sign too, and sort of feeds into the discussion as well about optimism, economic conditions expected to continue to better, and not only here in the U.S., globally for that matter, because it's a real big China story there as well.
Right, I was going to mention globally because, we could look at copper, and that may be, the best indicator out there for global growth again. And as you mentioned, it's great in China, at least from what we see in terms of reopening. And you and Stephanie talked about some of the economic indicators coming out of there. So things are going well, and that is fueling this rise that we continue to see in copper.
Yeah, Scott, let's continue to talk metals. I want your thoughts on gold, and then I'll ask you about silver. But first, gold attracted a lot of attention last week, spike up through 1,800. But I'm sort of wondering, as I just mentioned it, is that an old school kind of stop run? There was obviously a lot of focus on that 1,800 level. And obviously, there's going to be some stops up above there, and it was short-lived, as you saw, ultimately came right off. And that's with the dollar that's even been kind of weakening or still remaining somewhat flat for the most part. What were you seeing in terms of that bid and the rejection thereof?
Yeah, that was like a magnet. Like you said, that was a big stop area there. It's one of those big psychological numbers. Yeah. But I think we're seeing gold pick up this morning, even with global equity markets just, off to the races here. And you know what, Ben? 1800 may be kind of that new norm, whether the bottom is 1770-ish or so. This kind of may have shifted a little bit here, and that may be the new norm, because I don't think there's going to be any downfall of hedging, any downfall of risk aversion, coming forward into the third quarter. I think people are still going to be looking for that risk off type of trade, and where they go to, gold is certainly at the top of that list.
Yeah, there doesn't seem to be any rejection of the trend that we've been seeing to the upside. I actually wrote in the newsletter this morning about how gold continues to reward the bulls and those that have been positioning themselves risking to the long side. Scott, I wanted to get your thoughts on silver, because copper has been rallying. Silver is often tied to the industrial side of things as well. Gold, maybe not necessarily as much so, but do you think silver is going to breach that $19, $20 level eventually if this optimism continues, if, again, Dr. Copper continues to point north?
This has been the laggard for such a long time here, and we've talked about this since I think it breached the 16 level or so, which was a tough number. Are we going to get through 1920? I'm not seeing 20 as much of as a psychological number as that 1800 number in gold was. But if we do continue to see copper rallying, and copper can get up through 3 and maybe even higher, then you know what? And all bets are off for silver, but I still see it really as being the laggard and probably the last one to really break out here.
Yeah, major resistance to the upside there. If you look at the tech side of it as well, we'll continue to watch the fundamentals that play out. Scott, really appreciate you helping us to talk fundamentals, and then ultimately to tie it into some of these products that you have your eye on, that we should be keeping an eye on. Commodities are a good reflection of what's playing out here as far as economic conditions. And again, not only here in the U.S., but also globally. Scott Bauer is the CEO of Prosper Trading Academy. Scott, thanks for giving us part of your Monday morning.
Thank you, Ben.
Appreciate it. Look forward to seeing you back here in the near future. As traders